The successful sale of British Telecom raised £3.7 billion for the Treasury. It gave Thatcherites a taste for more. Electricity, gas, airlines. Few national assets were out of bounds.
From France to the Philippines, from Jamaica to Japan, from Malaysia to Mexico, from Sri Lanka to Singapore, privatization is on the move.
Something new had been born. Its name was popular capitalism.
Popular capitalism is nothing less than a crusade to enfranchise the many in the economic life of the nation. We Conservatives are returning power to the people. That is the way to one nation.
Stand capitalism.
After British Telecom privatization, the entire public sentiment became very positive towards privatization in the UK, and thereafter it became very easy for the government to kind of privatize a lot more other assets. So why did UK at the beginning got into this position where all of these assets were have become nationalized assets or public assets, to say so? This has an history in the World War II, post which the government felt that there's a certain responsibility towards public. That's when they also launched the NHS, which still continues. A lot of UK budget goes into NHS, which rightly they should. Health always should be a priority for any government, and it's best when it's run by a government. But whereas what about the other sectors? The government nationalized the ports, oil sector, even the car manufacturing, name an industry, everything was nationalized, including the chip manufacturing. So that it was very detrimental to the economy. And come 1979, UK reached a stage where it was losing about £2 billion a year, which, if we compare with India, what India is losing currently is still a much better position than India is in. So it's high time that India should consider its options, weigh in its options, and start taking an approach which is not half-hearted, right? Like how the UK government has done. So why does nationalization or a government running a certain unit or public sector unit is not a very economically viable option? It's not. Whenever you can see in our POCs as well, right? They are overburdened. The labor relations are not that great. The productivity is not that great. Efficiency is not that great. A lot of other issues, right? And it's not the issue with the workforce as such. There are brilliant people who are running those units. The issue is in this concept of government running or running a company. The underlying nature of that particular setup is flawed. And why I say this, you will see that in next couple of statements that I will be making. So always when a government is running a business, the political interest kind of outweighs the business interest. For example, the government can force the business to probably set up a unit in certain region to generate an employment. So is that a bad thing? Certainly not. It's a good thing because you're generating employment for that particular region. But in terms of business interest, it may not be that great thing. So there is always this political interest and business interest which the government should kind of wane. But does it do it really well? No. Always the political interest kind of outweigh the business interest, because they have to win their elections, right? And a popular way to do that is to kind of put politics in front of everything else. That's the exact line where a public asset or a public company starts dwindling into losses. And once that particular line is crossed, it's very hard to revive that particular company back, because even while we do a lot of improvements and bringing a lot of operational expertise in reviving that company, still the political interest kind of burden or kind of outweigh a lot of other business interests, as I said before, right? So it's not just about also operations, it's also about the capital, right? So if a government is running a particular institution, let's think this way: will the government put their money in health, education, and other popular schemes, popular welfare schemes, or rather it will put that money in that particular industry? So what do you think? Government will always choose these popular schemes which would get them good name in the masses, right? So the industry or the company is deprived of that capital investments or capital inflows. So what it can do? It can go to private lending institutions and ask them for money. Then again, well, how easy it is? Which lending institution or the bank would be readily happy to invest, knowing well that the owner is the government, and it knows how easy or how difficult it is to deal with the government, right? We have seen this happening, like when Air India was listed for privatization just before the elections of 2019. Government kind of still wanted an ownership of about 20% in Air India, and that's when we saw there was no bidders, because they are having a government sitting in a boardroom or dealing with the government is not that easy. So why invest in such an entity where government kind of overpowers the business interest, right? That's how the financial institutions think, and that's why we did not get a bidder for Air India back then. But now again, when Air India is going for privatization, government has realized its mistake, and it said it's 100% privatization. Government does not want any ownership in Air India, and we've seen the result. We now have the bidders for it. So government does know, and it has seen several examples that this half-baked approach never works. And I still again question, why lease and why not go for a full sale? When you know, by lease you mean the government is still the owner of that asset, which essentially means the private institutions may not be willfully investing in it, or that's essentially or eventually means the buyers would only be interested in those assets if they are getting with a very undeserving price. If they see that value that it's coming at a very suboptimal rate, then the private institution or the private entity would be interested in going for that lease. Otherwise, if it's properly valued or deservingly valued, then I don't think the private entities would be interested, because again they have to deal with the government, right? What is survival and self-interest? Self-interest and survival is one factor which essentially kind of drives the PSUs or the public sector units into negative side of the business, or probably into a loss-making unit. So what is surveillance self-interest again? So everyone who is working for a PSU or a public sector know it very well that the success of that unit is not tied back to its survival. Whether it is successful, whether it is making money or not, they have this underlying understanding that that particular unit will survive. It will survive on the public money or the taxes, or call it the exchequer money, right? So when success is delinked with survival, essentially it kind of becomes a government office and not a business, right? That's and what is a self-interest? Self-interest essentially would mean that self-interest of the employees, managers in driving that particular business towards profitability. And as I said, if survival is not linked to success, there is no self-interest in driving that success. So there's a lack of self-interest as well, right? Then, so this is kind of a loop that these public sector units get into, and eventually they start trading into losses, and then becomes a much sicker unit. And if we go back to our the discussion point of like, until when the government or the public money can fund that particular institution or a company. There's always that tipping point when the government would sense that it can no longer support or fund that particular company, and it would then privatize it at a much cheaper rate than what it deserves, right? Yeah, that's entirely about how this self-interest and survival works. Another factor which kind of brings these public sector units down is attitude of not serving the consumer interest. These companies or the public sector and the PSUs always looks towards the government. What are the government policies? What is government coming up with? And if government is again giving us some subsidies and stuff. For example, when Margaret Thatcher government formulated newly, the first people or consortium to meet was from this mining corporation, where they have asked the government if government was ready to push in more subsidies. This is when the UK government was reeling under that burden of 2 billion pounds losses that these units were making. So even in that particular scenario, these corporations were expecting that the new government would give them more subsidies. So that's the entire attitude and how this public sector units think, right? Their prime objective is not transforming or adjusting to the market demands or the consumer demands, but it's more like of looking towards the government, like what is government going to do for them, and that's very detrimental for any business. So, yeah. So summarizing, the three factors that are detrimental for any public sector is one, definitely the political overweight over the commercial interest, as we discussed. Two, lack of self-interest, and three, the delinking of success to survival. Now let's talk about the ownership, the power of ownership. So in the UK example, after these assets were privatized, a lot of improvements have taken place, like the productivity increased, the efficiency increased, the revenue potential increased. For example, the employees at British Airways and British Gas, the productivity per employee increased by 20%. The call drops in British Telecom dropped from 1 in 25 to 1 in 200. And the British ports, where labor disruptions was much common, became almost non-existent. So that's how the ownership works, right? Once and in all of, when I say ownership, in all of these companies, the employees kind of have bought their shares in those companies. Like in British Telecom, 96% of the employees; in British Airways, 90%; in British Ports, again 90%. In all of these companies, when they went for privatization, the employees bought their shares in these companies, and once they have become the owners of these companies, their attitude completely transformed. From being an employee, they have kind of started realizing that they are the owners, part owners of these companies, and that's quickly transformed those companies. And from being a sick unit, they completely transformed into profitable entities. That's the power of ownership that usually brings in, right? And in a way, the UK government kind of envisioned this even before they went for privatization. For example, they could have sold all these assets to probably like 2 or 3 big financing institutions or big businessmen in the country, whereas they did not choose that option. They have rather chose an option wherein these companies were listed, and it's a common public who could buy those shares, and most of the employees of those companies bought those shares. That's where the ownership aspect has kicked in, and the common people in UK used to who invested in the capital markets were about 9% before privatization, but after this entire initiative, it rose to 25%. So the public attitude also kind of completely transformed after this particular privatization, which helped in the long run. Whenever the government wanted to go ahead with similar initiatives, they did not feel that friction that they felt when they did it for the first time. Yeah, the role of the state. So I have now discussed the 3 factors that determine the success of a public sector, and there's a 4th factor which is much more important, which is the role of the state. So in the UK example, going back to the UK example, I mean, when these companies were nationalized after World War II, in that 40 period of nationalization, which it kind of when nationalization was the prime objective or the ideology of the UK government for those 40 years. If you see the parliamentary debates, they were filled with discussions such as labor relations, investments, losses, and where should that PSU should invest, or where that particular PSU should open a new unit, stuff like that. So there was hardly any discussion about what the consumer wants. Right? What are the if there, for example, in the telecom sector, if consumer was not very happy with the time it takes for the connection, there could be many. I'm just giving one example. There could be many such examples. These never were a part of the parliamentary discussion. the entire all the discussions were about how the unhappiness of the employees, labor relations and stuff like that, and the entire civil servants objective was to sit across the table with the managers and the industry players of the businesses, again talking about the same stuff: labor relations, the reasons for loss making and stuff like that, which is not ideal situation, right? The civil servants are supposed to be serving these public at large and not these industries. So that's where the role of state was very skewed. The state was sitting as a owner of these industries and not like a regulator. So what is the difference? When it's a owner, it's the interest of that owner is to run that industry, to solve those employee relation problems and stuff like that. Whereas when it's a regulator, the interest of the regulator is essentially ties back to the interest of the consumer. If the interest of the consumer is served properly or not. For example, if the call rates are optimum, if the connection timelines are minimal and stuff like that. So after privatization, if we see the parliamentary debates, it kind of transformed from those labor and loss making discussions to the consumer level discussions, like what consumer interests are being served and what are not being served, and keeping the industries honest and holding these industries accountable for the consumer interest, kind of overweighed about in these discussions after the privatization. That's how the role of state transformed.